We're recording now.
I tried to go share it to my page too, uh, on your empowerment program page. You shared it, okay?
I'm just gonna write the little topic.
Okay.
It's setting up now.
Okay. Yeah, I think it's cool how Zoom actually utilized that the Facebook platform to integrate. Man, that was pretty neat.
Yeah, yes, it does. Facebook and YouTube, it will allow you to go live.
Yeah, that's pretty neat there. Pretty good resource to use. I haven't did the live YouTube, but I have done Zoom or whatnot.
So we live. What's going on, Big Nick?
What's going on, T?
Nothing much. I appreciate you joining me and the empowerment platform. You got to watch some of the video last week, I know, and I really wanted to bring you on because any kind of empowerment, at some point, we have to get to economic empowerment. And
Absolutely.
I've been following you on that, your teaching, your passion for bringing the ideas back home, especially for us, because
Absolutely.
me and Nick grew up in the same area, small town in Uriah, Alabama. Uh, and I don't know about you, but growing up, even though our families worked hard, they didn't really talk about economic empowerment.
Facts.
I mean, you work, and you grind, but that saving, that investing, that um, life insurance. I'm quite sure they had life insurance, but I never heard anybody talk about it. Like I didn't
That's right.
uh, a strong understanding of that until I left Alabama, and then at that point, I started
Right.
coming up with the insurance thing, going live on Facebook, putting posts, being passionate about teaching and sharing that information. So, my first question to you is, how did you get to where you are? What kind of, or how did you get introduced to it? And what made you want to go that direction in being a financial advisor?
Man, that's a good question, man. And first of all, thank you again, man, for having me on, because I really do appreciate the time, that you're giving on your platform, man, because this is big. So I'm really excited about it. But good question. But to answer your question, man, it really was introduced to me by my cousin. I'll just be honest. Really quick story. I actually went through the corporate America route, like everybody else. Get the job, good grades, get the job. I mean, get the degree, get the job, all that good yin yang, man. And I was actually riding back and forth, and this is how the spiritual impact actually works as well, man. I was riding home from work, and I was thinking, man, like my income has doubled since I left my job. I have took on another job. Pretty much I don't have, no real debt besides some student loan stuff or whatever the case might be. And my life is I'm still not happy. I'm still not in peace, with my entire life with that. And like you said, we're from the same hometown. So it's kind of wanting to reach back and do something from what we have come from. And honestly, man, my cousin called me and she said, you need to talk to this dude about money. Just out the blue, one call from home. And I said, well, I'll go talk to him. No big deal. So I went and talked to him, man. And at times, this is really me being very transparent. I was kind of, I wouldn't say arrogant. I guess a little cocky. It may be the same term, but I'm trying to kind of dilute it a little bit. But I I went into the meeting, man, and Alan Suggs was his name. He was introducing me to the information. So, man, I got in there. He had polo down, Tyler. I mean, polo hat, polo shirt, polo shoes, everything, man. So, like I just told you, now my income didn't double from where I came from. So I'm thinking I'm doing pretty good. You know what I'm saying? So I like, what this dude gonna show me about money? I literally had my legs crossed, sitting back in the chair, kind of had like my cocky little swag going, And man, when he showed me the principles and the rules and the things that I teach people, man, it just was mind blowing. It was like, wow, like I've been making money. Like you said, we grind, but we never learned the rules of the game. We never learned how the money actually works that we're working for. It's like we always chasing the bag, like they always talk about, but we never teach, the bag how to chase us. For analogy there, man. But yeah, man, that's why I got passionate about Honest Tires. I seen the information, how impactful it was, and the conversation that we didn't have in our households. Like you said, I didn't learn about insurance, investments, any of that until I left my household. I never heard my mom talking about anything when it comes to financial stuff. If they were talking about finances, guess what? You had to leave the room, because they was fussing about money, more than likely. You know what I'm saying? And never talked about being independent, anything like that. But like I said, when I first heard this information, I really thought about my hometown. I really thought about my family. I really thought about if I could bring one piece of something back that would be helpful for my community, it would be to teach them economic empowerment, to teach them how to get more excited about money, and I think that was what I was so excited about, bro. So that's what kind of pulled me into financial services, man, was just to learn. Once I got introduced to the information and I started sitting down with people, like I started sitting down with, and matter of fact, I sat down with, I think Fella was one of the ones I sat down with first, because married couple, you want to sit down with married couples, of course. But I sat down with him and, a couple other people, man, and I seen how impactful it was. I seen how many questions that they had and how many questions I could answer, things like that. And I was like, man, I actually might have something here. So, that was in 2013. And I moved back to Montgomery in 2015, I think it was. And I started my own office here in Montgomery. So I have an office here and one in Hoover. So that's kind of how I got started with it, man. I just really ran for it. I really, like you said, it just came from our home raising, man, just being transparent about it. It came from us, living off of the things that we had, and doing what we had, but at the same time, how can we enhance that? We was taught to learn, grind, and things like that, but how can we enhance that portion of it, man? So yeah, that's why I kind of got my first little taste of it from, man, in Hoover, Alabama, from my cousin. But that's 2013 where I kind of started this journey, man.
I got you. And I listened to a little video the other day. Jim Rohn was talking about a lot of people, they don't reach the level of success that they want and have the finances that they want. And it's not for lack of working hard. Everybody works hard.
Everybody work hard.
Think hard.
All right.
Think hard because we don't know. We don't.
That's right.
And how to invest and how to get assets versus liabilities.
Right. True. Facts.
We don't have that, just that, let me go buy a rental property or let me invest in the stock market. And I find that a lot of it is not only not knowing, but fear of that unknown.
True.
What if I put my hard-earned
Right.
money that I got in this savings account getting 0.02%? What if I put it in the stock market and lose it all? And I'm sure
Right.
that all the time when you're speaking to people about investing and putting their money to some kind of in some kind of vehicle.
Right. Right. And you know what the crazy thing about that, Tires, is when people do stuff like that, it's because of lack of knowledge. Right. And you want to talk about Jim Rohn, you know, he talking about risk. You know, he took out the word risk. What's risk when you know something? If you know what's going to happen, you understand it. What's the risk in that? You know what I mean? If anything, it's a more calculated risk. If you're looking at it from that standpoint, if you want to just term it in a risk category. But when you understand and know about the stock market, nobody talks about how much money they make, but they quick to blow up and say how much they lost. You know, they want to blow that all over the internet, all over the internet everywhere, but they don't talk about the money that was made. So that's one thing I teach people is the most practical way to invest your money, not the, you know, extravagant person that want to play the lottery. You know, they want to give a little bit to get a lot. No, I'm talking about practical strategies to teach people how money works, man. So that's what I do. I teach people really, really practical ways to invest and grow their assets, man. So that's what I teach people.
So Nick, before you get into a deep dive of what you actually do, I see on your back wall you got your why. And
Okay.
when you're starting a business or when you're doing anything that can be tough, and
Right.
you got the naysayers and you got the people who you thought were going to back you, but they don't. You got to have that why to push through. So tell me a little bit about your why. And
Okay. Okay. Good. Hey, man, that's a good question. It's crazy. You asked that because a lot of times I tell people about business. Even though I do insurance, I do investments, I do financial services when it comes to 401ks, all that good stuff. I said that stuff been around for years. But what keeps you in business? What is the impact that I'm truly trying to make? So when you talk about a why, you know, you have to think about what is the reason you're gonna go down this path. You know, and if you go down this path, like you said, it's gonna be tough. It's gonna be some times where you want to quit. It's gonna be some times where you want to get mad, you get upset, you get frustrated. But the reason I did it, and I'm transparent in this conversation, is because of my kids. Like I truly want to have a life with my kids. I don't want to be the tired daddy. You know, I remember my dad, and I'll be honest with you. I remember my dad working 12, 16-hour days. My dad would come in, I would want to play with my dad. But guess what he's finna do? He's finna go lay down. Why? Because he's tired. You know what I'm saying? So, and like you said, we work hard, and morally, he was doing the right thing. He was providing a quality life for my family, for our family, right? So I said, you know what? I want to change that. You know, my wise, I want to be in my kids' life. I want my kids to learn, you know, values that and moral values, you know, that the world is not going to teach them. You know, the world is going to throw them out there and try to eat them up. But I want to teach them things, man, that they learn it at each stage. Like just this weekend, I had all three of them here in the house, and they got hoverboards for Christmas and all that other stuff, man. And they was all excited, you know. But one thing I was teaching them was how to protect their sister. You know, how there's two brothers, like how you gonna protect your sister? That, you know, hoverboard is kind of hard to ride a little bit. Well, it was for me. It might be easy for somebody else, but it was kind of difficult for me. But for them to teach her, you know, those type of things, I want to teach those type of family values, man, in my family. I really want to teach them that. So that's my why. I can't lie. I think that me having the flexibility of my time, getting into an industry where I have the time flexibility, that's my why. I just want to make sure that I have time for my kids to know that they daddy there, you know, for them, and they can appreciate the quality of life that I'm going to provide for them long term, man. So that's my why. That's why I have it up on the board. I want to see it when I wake up. I want to look at it. You know what I'm saying? I want to, when it get hard and I want to cry or get mad, like you said, people don't want to, you know, the people that you thought was going to come through, not going to come through, you know, so you still got to go after it though, because you made a decision, you know, you put aside everything, you made a decision to go make it happen, man. So that's basically, and this song Joaquin said, and it was impactful to me too. He said, you can't just have a why, you got to have a strong why.
oh,
And I was like, man, that's pretty deep. You know what I'm saying? That's pretty deep. Like, it's not just a why. You got to have a actual strong why to actually sustain you in where you're going, man. So I really, and I appreciate them. And even for him, you know, speaking to him in that matter, to have some people around you, man, to have a squad around you that appreciate you, your vision and where you're going. That's my why too, because I want to be able to inspire. I want to be inspired, millions of people. I don't want to be limited. I want to be millions of people that I inspire to be able to do something for their family, something above what they think they can do for their family. I think a lot of people get kind of complacent and thinking that, I got to stay in this box because my fourth grade teacher told me I wasn't going to be nothing but X, Y, and Z. No, you're unlimited. You know what I mean? Like, you have so many dreams and so many wishes, man, but your wife's what's going to keep you, and your wife's what's going to push you to the next level.
Absolutely. Absolutely. We must be reading the same books, because everything you I'm talking about speaking to my spirit. So
that's right.
As we go into this deep dive, think of me as a person with limited knowledge on finances, and I'm a little nervous. I work, my money is under my mattress. Why should I?
Right.
And where do you start when you have an interview with somebody? Where do you start?
Okay, first of all, good question, man. I actually start with education. I think and you alluded to Jerome talking about that. I think if I educate you and teach you how to make a decision for your family, I think you'll be better off, because at the end of the day, I'm only going to recommend it to you. I'm not going to be the person that's going to do everything, but I'm going to recommend it to you, right? So once I educate you on the options, and I'm giving you, I'm sitting down with you as a new person, and like I said, you green, you just learn, you just want to get some information. I'm going to educate you on each facet of where you at. It depends on where you are. Some people that I deal with are younger. Some people I deal with a little older. So it depends on where you are, and we're going to do what they call a F&A, which is a financial needs analysis. It helps determine. It's basically just a GPS. All it does is help determine which route you want to go. And then at the end of that, right, I'm going to give you some options, right? What do you want to see yourself? How do you want to see yourself over the next 5 years, over the next 10 years? And from a practical standpoint, let's work with what you got now. Let's not talk about, if I made, $30 an hour or $50 an hour, if I made $200,000, well, you're not making that right now. So I can't work with that right now. We got that, right? We got to work with what we got. And we got to be able to utilize that in the best fashion as possible. Like you said, and if you're the person that said, well, I'm just going to put my money up under the mattress. Well, I'm going to show you what that looked like over time. So let me show you what putting your money up on the mattress is going to give you. First of all, it's going to give you nothing. That's just one blame. Not going to give you nothing. But at the same time, if I can show, the only reason you put it up on the mattress is because nobody educated you on other options that may be available to you. Such as a mutual fund. Let's make it very practical. Let's talk about a mutual fund. So if you come in and you get something like a mutual fund. Now, a mutual fund is nothing but a bunch of household branded name companies. Nike, let's say what you eat. Let's say some type of food product, gas that you put in your car, the car that you drive, the clothes that you wear. So if you can invest in all of these different things and get a return on your money, whether it's 7, 8, 10, 12% on your money, these are things you're investing in anyway. So what are the chances of all of these things going bankrupt at one time? Probably not going to happen. But what if one of them does? You have the balance of all five because you're diversified. So something practical like a mutual fund is there. Now, people got to understand what a mutual fund is. And that's what I go into detail to kind of explain to them what it is. It's nothing more than me, you, another person pooling this money together, investing in these companies that we invest in every day anyway. The phone bill that we have, the light bill that we have, the car we drive, we invest in the stuff that we are already using on a day-to-day basis. So that's what we do and get a return on that. So now, do you want to get a return on your money, or you want to sit up under the mattress and not get anything? Because honestly, you're losing more money by sitting up on the mattress, because this is why. Inflation is 3 to 4% a year, right? So if inflation is 3 to 4% and your money is sitting up on the mattress, that means gas was $1 or something, 15 years ago. Now It's almost $2.5, $3 now, right? So if I got $100 and I'm going to buy gallons of gas, how many gallons can I get with that $100? For $1, now I get 100, right? But when gas goes to $3, I can't get what 33 and a half gallons, right? That's all I can get. So my dollar can't buy as much later on as it could early on. So that's what I teach people. You losing money anyway by sitting up under the mattress. So I rather take they want to say take a chance. I'd rather take a chance at making more money than not taking a guaranteed risk, right? It's guaranteed you're gonna lose money by sitting up under the mattress. So basically, man, I educate people on, financial principles like the Rule 72, the theory of decreasing responsibility. I teach people how to take care of today. What are some things we can take care of today? And when I know we talk about life insurance, and I'm gonna talk about it a little bit too. But you want to talk about insurance. You want to talk about your emergency fund. You want to talk about, your debt solution program. You want to talk about these things because some people are in better shape than they think they are. They just haven't compiled these things together and understand the direction that they want to go in because it just looks so chaotic. You know what I mean? I met a lot of clients that I have that really doing actually exceptionally well, but they didn't realize. I was like, wait a minute, you got X, Y, and Z, you got this, you getting this a return, you get it. Oh, this will be done in 3 years. They're like, oh, really? I thought I was going to, So it's really just connecting the time frame, taking an hour out your day, 2 hours out your day, just to put a strategy together. That is totally it, man, and kind of go from there. But that's the main thing. I make it very simple for it because I think people are tired of being sold. Tyrus, I think that's one thing. They're tired of being sold. People want to be aware. They want to be aware of it, but they want a solution of the awareness, right? So if they're aware of it now what's the solution? Okay, let's put this here. Let's put this here, and this is going to be your predictable outcome. Not unpredictable. This is your predictable outcome. So if you stay up on this path, you'll be able to get the results that you're looking for. But if you never sit down and do it, or if you never put that plan together, it's going to be hard for you to predict it because it's too chaotic. You know what I mean? So that's the main thing. I make people real comfortable in the education process. I educate them on the rules. They want to save for their kids' college plan. They want to get their retirement plan together, their 401k. I strategize with that as well. So, because there's some areas, and there's another thing too. A lot of people are trying to put 15% in their 401k. I said, well, if they're not matching your 15%, they're only matching 4% of that. Why are you putting 15% in there? Why wouldn't you take some of that money and put into like a Roth IRA? Well, it's tax free, because that money you ain't got to pay no taxes on when you get of age and take it out. Why are you going to put all that money in a taxable account when you can put it in something that's not going to be taxed? So you just put the 4% in there and take the other 11% and you put it into an IRA account. It just makes more sense when you organize it, right? Kind of go from there. So that's it. Because I tell people with 401k, you got to take the money out anyway. Yep. You still got to take it. You can't take the 401k with you. You got to take it out. So get the free money though. Don't get me wrong. Get the free money. If the company matches, get the free money. But yeah, man, that's basically what you want to do is strategizing that plan, man. That's the biggest thing I can say. Just getting that plan together and strategizing.
So, and to kind of hit on the 401k versus the IRA, you have more options, right, to invest in more things than you do with your traditional company's 401k plan.
Yep, exactly. So this is what a 401k is. A 401k is nothing but a tax code. Let me clarify that real quick for the listeners. An IRA gives you an option, especially with me. I can be able to go and put a portfolio together because I got at least 7 different companies that I can go utilize. American Funds, Franklin Templeton, Invesco, Legg Mason, all these different companies, which they have in themselves have different portfolios of funds that you can utilize, right? Now, from a traditional job perspective, you only got about 20, maybe 25. Most I've probably seen is 30 options, right? The most I ever seen. Most of the time they're in between 20 to 25 because it costs more to have more options, right? So if you got about 20, 25 options, most people don't even know what those options are. And then they get the crappiest options because they're cheaper. So you get a cheap fund for novice investors because people are only excited that you got a 401k because it's on their job. Mm-hmm. Oh yeah, my job is X, Y, Z. Yeah, but it's still your money you putting in it, unless they match. Now, unless they match, because some companies just don't get into the matching part these days. But some of them do. It's still some of them that do. But either way, even if they do match or whatever case might be, your money could be growing at 2 to 3%. because the funds inside of it could be crappy funds, and that's all you got to choose from. You only got 20, 25 options. So IRA, like you said, gives you more options, more flexibility, more control. I think I tell people to be a CEO of their finances. You definitely want to control. The options is always, because it's so many options that you have with us, because the options give you the ability to say, okay, I'm gonna put a portfolio that's conducive to whatever you want to go in. Because like I said, you might be older. You might want to get into more income, fixed income type of funds, or, municipal bonds, things like that. Just depends on which route you're going in. Tax-free type stuff. Just depends on which option, which area you want to go in, man. So I think that's big in itself. So yeah, that's basically what I do, man. Just give people the 401k versus the IRA. And like I said, if you want to keep both, you can. But strategize with both versus just saying, you got one or the other, or whatever the case might be. So, because I tell people all the time, if your 401k matches, stay there, partially, and then just do the match, and then go, get your IRA set up, because that's something that you control.
Yeah. So with life insurance, I see a lot of times, and I see it even with investors that do well, they pass away. They don't have no kind of life insurance. And even sometimes I've known investors that passed away that didn't have a plan. So they family trying to figure out, okay, what all were they a part of, and how are we splitting it up? And then I see these GoFundMe pages. Burial expense.
Right.
And what I've heard, and I haven't even personally, like myself, I don't know a lot about life insurance. I just know I went in the military, I got out, they gave me veterans group life insurance. So without that, I probably wouldn't even know what I'm looking for. But I have heard the two, term and the whole life. Can you break those down for me? I really don't know. And because I promise you, I hear people that swear by term, I hear people that swear by whole life, and then they're like, well, you got to get one or the other. So how does that work?
Right.
I guess maybe it's a strategy. It depends on where you are in life, which one may make more sense. So teach us a little bit about health insurance, because it's definitely needed at the minimum, so your family can be able to bury you when you do pass away. And it's just proper estate planning.
Right. All right. And honestly, man, I tell people all the time, and this is a side note to to that though, but I only offer term.
Okay.
And I'm gonna tell you exactly why I only offer term though. The difference between whole life and term is whole life is still a term product. Let me clarify that. Right now, I'm gonna go back to the conversation. A whole life product is nothing but a term product, and it's matched with a savings account.
Okay.
That's it. So what it is though, what it allows people to do, right, to take a portion of their payment, right? So let's say they make $100 payment. A portion of it is going to the face amount, right? So let's say the face amount is $50,000 or $100,000, whatever it is, right? Let's say $50 go over to the face amount, and $50 go over to the supposed to be savings account, right? So what I teach people is just to buy a term, because you know exactly what's going on. If it's a term, a 35-year term, you got from year 1 to year 35 to protect your assets, because insurance was made for today. It was not made for when you turn 70, 80, 90 years old. It was made for today. That's what it was. It was made for income replacement, right? It was made to replace the income. And I'm gonna give you a little history on this. A couple of companies, and I ain't gonna name no names, but a company was started from New York and was brought down to the South, right? And what happened was the plantation owners was losing slaves, right? So what happened, he came down and was selling the slave owners life insurance on the slaves. So when they lose a slave, they can replace that slave with money, because they got to go what? They got to purchase another slave. So if they just lose a slave and they don't have the insurance, they got to go buy another one, which comes out of their pocket. But if they got insurance, they can pay the small premiums. They can take that money and replace the slave, go to the auction to buy another slave, right? So it was made to replace income because part of that slave was bringing in what? Income, right? So that's what that was came from. So just a little history lesson while I go into that. But when you talking about the difference between both of them, let me get back to that. There are different aspects to whole life insurance, right? So first of all, think about this. What bill do you want to pay your entire whole life? What bill do you want to pay? None. There's no bill you want to pay your whole life, right? So with term, it teaches you how to be able to say, you know what, I'm going to strategize, like you said earlier. I'm going to strategize a plan to protect my family now. I want to get the maximum, 500,000, a million, whatever the case might be. Because today they need, if I was to die today, right? And I was going to live for another 30 years, right? Because retirement is 30, 35 years, I guess you would say, right? Sometimes 40, just depends on which direction you're going. So in those years, if you make 50 grand for 30 years, that's $1.5 million that you're going to bring to your family's household, right? So basically, and then get more, of course, you get increases and all that type of stuff, but I'm just talking about simple numbers right now. So that's $1.5 million in income that you're going to bring to that household. So that's how much life insurance you need, right? Now, thing about it is, now let's fast forward though. If you fast forward to 40 years from now, and let's just say you got $1.5 million and you got no debt, kids grown and gone, pretty much everything's pretty much paid for except for, lights and normal expenses, whatever, things like that. You don't technically need income replacement because if you die tomorrow, you're going to leave your family $1.5 million. And I think they'll be okay. I think they'll be okay. From that standpoint, I think they'll be okay. So in a nutshell, when you go back to talking about whole life insurance, people buy insurance for later on in life. They'll buy it for the age of 80 or 90 or whatever the case might be. Now, let me rephrase a lot of this too now, and emphasize on this. Whole life has its place, right? It shouldn't be the first option though. Okay. Right? It's kind of like I think it's kind of like I guess like credit. You know what I mean? When you don't have the best credit score and you have to go to somebody else because you don't have the best credit score, it's kind of like the same thing with life insurance, right? If you can't qualify for a term product, which like you say, you need life insurance. If you can't necessarily qualify because of health reasons or, some other reason, then you need to go get a whole life product. Now, it's going to be way more expensive and you're going to get less face amount. I'm just being honest about it. But like I just told you, if you're a young family and I'm coming to you and you're a young family and you need $1.5 million in a whole life product, you probably not going to be able to afford it at the time. That's probably going to be about $1,200, probably just around about $1,200 a month now. Now, if you try to go get, exactly, but if you try to go get a term product, it's going to be about maybe $200, maybe $150, maybe $200, right? So I think you would rather pay that, right, than going and trying to pay $1,000 to $1,200 a month, right? So, and don't be fooled. This is the thing about it. It's some bad term products out there, right? This is what I mean by being a bad term product. And be aware of this, guys, people that's listening out here. What these people will do, they'll go put you on a 5 or 10 year term and they'll talk bad about term, right? So they'll go put you in a 5 or 10 year term. And when your term expires in 5 years, and they might give you $1 million worth of coverage, which is going to be really cheap, right? Going to be probably about $20, $30 a month, maybe that, $40, depending on your age and all that type of stuff. So what's going to happen is in 5 years, you're going to get a letter in the mail or you're going to get a call. Say, hey, listen, Mr. and Mrs. Client, you just had your policy is going to go up. It expires, it's going to go up to X amount of dollars. You're like, wait a minute. That's extremely too high. I don't want to pay $130 or $200. Well, if you buy this whole life product, it'll stay the same for the rest of your life, right? So if you're not knowledgeable, again, like I said earlier, I educate my clients when I'm talking to them. If you're not knowledgeable, you'll fall for that because that's the old bait and switch product. I'm going to bait you in something and I'm going to switch you to what I want you to be in the first place. Because what happens is, and you can do research on this as well, what happens is people get paid a lot more money on the whole life or the premium because they're trying to pay for their whole life. Okay. So, of course, they get paid more money on it, right? So they push that out there to a family and things like that. But I tell them, if whole life is the best thing out there, where's the money?
Right.
Where's the money? Where's the money? That's why I be trying. But with term, and I actually had the chance to file my first, since I've been in the business. I never want to file a death claim. Do I love the fact that I got? Matter of fact, I did the calculation the other day. I forgot how much life insurance I actually have in force, and I only had one death claim so far. It was a tragic. Guy was really young, 32 years old, matter of fact, and had a death claim recently. So, I feel bad about that. But hey, we was there to actually put it in place, and that's what it's actually for things, unfortunate situations like that to happen, man. Got 2 kids, so definitely would be able to, you always want to be more. And since I've been in this industry, man, it's like you always wanted to be more. You know what I mean? You always feel like, dang, I wish I could have had a death claim. Maybe. Yeah, just talk them into doing more, that type of thing, man. So I definitely want that to be something bigger. But at the same time, to get back to this, when you got that whole life product, it's a couple things you got to look out for. All right. So let me break the rest of it down to you. If you're paying for a savings account and a face amount, if someone dies, ask your agent, say, can I get both of them? If my husband was to die tomorrow, do I get the face amount and the savings account, or do I just get the face amount?
Okay.
They're gonna say face amount, right? Okay. If I borrow off of this money, first of all, I had to say the word borrow. I didn't say how to get it, right? So I got to borrow off this money means I have to do what? I have to pay it back, right? If I don't pay it back, you're gonna take away the face amount of my policy. So if I got a $50,000 policy and I take out $5,000, that means my policy gonna go from $50,000 to $45,000. All right, that's another thing. And then I gotta pay it back at 6% or 8% interest on it. All right, and that's just crazy. So, and then you got other types of whole life products. Like it's a whole bunch of whole life products out there. I can't be honest. You got variable life, you got flexible, variable, like all these other stuff, man. And honestly, for the most part, if you can stay away from the majority of it, stay away from it as much as you can. If you can't, try to find something that's feasible for your family, but know the fact that when you put money into this thing, you're not going to get the savings account. If you get the savings account, they tell you can get it, you're going to pay way more for it. So if you're paying $130 and they say, well, you can get the savings account, but now you got to pay $180 to get the savings account and the face amount, because you got to pay more for that. I don't know if they call it a rider on those policies now, or because they didn't change the game. I mean, even since I get in, I've been in since 2013, and they didn't change the verbiage on a lot of that stuff. That's why I only offer term, because honestly, man, I don't want to deal with all that. It's just too much. I can just deal with setting my client up with a solid term policy, so they'll know exactly what's going on. They know when they get to the end of this, just like your car insurance, your homeowner's insurance, your health insurance, all these insurances renew every year, right? So you got to renew it or whatever case might be. So with life insurance, you can renew it too. So at the end of the term, 35, 30 years, whatever, I do up to 35 years. So you just renew it. And if you don't, hopefully you don't need to renew it. We want you to not to renew it. But if you have to, you can renew it. Maybe the premium will be a little higher, but we can adjust it down, because you might get $1 million policy, but at 60 years old, 70 years old, and you got $1.5 million, do you need $1 million worth of coverage? Mm-hmm. You already got $1 million, right? So why would you want to go pay for something that you already have? It just don't make sense. But if you put the strategy together, understand the whole bigger picture of it, then you understand why, okay, this is why I need a solid term product, and whole life is something that's inferior. It's an inferior product. Just know that you're buying an inferior product. Like, it's okay if you know what you got. Just be educated on what you have. That's all I'm telling people, right? Kind of go from there. That's it.
So since term is cheaper, that's kind of where you guys get into the buy term and then take what you're saving and put it into an IRA.
Absolutely. You want to invest the difference. So, and I don't want to box you into the IRA thing, because, you may already have one. You may want to do a kids college fund. You may want to start putting it on your debt, and we do talk about buy term and invest the difference, which is but when we talk about investing, not necessarily investing like investing in the IRA, but you can invest in your emergency fund, like you're investing in taking your debt down. You're investing in self-developing your personal financial program, so you can get down to a peaceful situation. You know what I'm saying? A more organized situation where it's not chaotic.
Okay.
So that's what we mean by that. Yeah.
Gotcha. So in this planning, you offer long-term consultation and counseling to your clients?
Absolutely, absolutely. Man, I got clients that call me and they'll simply ask me about their 401k. They'll simply ask, and even though I offer a 401k, it might not be theirs that I'm actually talking about, but or the one that I offer them, but I actually help them strategize with, okay, y'all been with me 5 years now. I just had this a couple it was not last year that I had, because I've been in the game going on 7 years now. So I say, well, time to reconstruct some things. Y'all done went strong on the home front. Y'all got 3 more babies, you know. So things happen like that, man. So honestly, we might have to adjust some things. Maybe we need some more coverage. Maybe we don't need as much. Maybe we need to start talking about an annuity product. Maybe I had a lady call me the other day about an inherited IRA that she was looking for to get done as well, because her dad left her a really great lump sum of money. So now we gotta construct some things now, because she has a really large sum of money that she has to evaluate and get that going. So yeah, like you said, long-term consultation. I have a bunch of people on my team that's being trained. Even me, if I can't personally get access with you, I have some people on my team that'll be more than welcome to service each one of our clientele. So I kind of go from there.
Okay. And another big question I know a lot of people ask, and they definitely ask it in the real estate arena, and I think second to not having the proper awareness, second to the fear is, well, do I need a whole lot of money to start? I only got a little bit. I'm barely making it. How much do I need to get started?
Man, to be honest with you, man, all you need is $25 to $50 to get started. That's it. $25, $50. And that'll set the tone and that won't make you rich. I tell people all the time, it don't make you rich, but what it does, it gives you a wealth of information. Because even me, I can sit down, okay, I got people that's 20 years old, Tyrus, to be honest with you. I got some clients that are 20 years old, and they just started this $50, they work in McDonald's, but they started this $50 investment, right? So they just starting out. Now, like I said, it won't make them rich. Well, guess what they're going to do over the next couple of years? They're going to have the knowledge of understanding that I got to go talk to my investment guy, because now I'm working at, this other firm, or I'm going to work at, a better job where I get making more money. Now I can put more money into it. So now I can put $150 in there. I can put $200 in here. I can put, $300. I can max it out if I choose to. But what does that look like? So over the course of time, they can have somebody to go to, right? Instead of them just blindly trying to do something, or just blindly putting money in their 401k, they can actually come to somebody to help them kind of sift out and filter out some of the nonsense, and kind of understand, okay, this is where you want to go, so this is what you got to do. All right, oh, this is not where you want to go, okay, well, we can't do that. All right, so it kind of help you, guide you to get to that place that you want to be.
And I think that with you educating people and not coming off as I'm just trying to sell you is very helpful, because a lot of times it's mindset. I mean, when you hear somebody say, well, I don't have X amount, and you look at their situation, well, you paid $100 for a pair of shoes. That's a liability. And I listened to
just yesterday.
I listened to TD Jakes this morning on just a video, a recording, and he was like, people paying $130 for their babies is 3 months old.
That's right.
Clothes they gonna grow out of. Stop putting your money in things that are temporary, and put it in something that, and I know you can speak on this, that will compound. So even if
that's right,
$50, that compound effect is going to increase that over time.
That's right. That's right. And they got to get to the point they understand. Just like, and this is one thing I want to start doing myself. And I've done a small versions of it, but not to the full impact, because I still have to go through my kid's mom to do some things. So the things I want to do, I got to do, but I still got to go through them. But start really getting with the family, and start, instead of going to buy all these toys and all these things, like, make sure you can put, every year you put like $500 back, for each kid. You want to give, that's a gift. Like I told my kids this year, in order for y'all to get anything for Christmas, y'all got to show me where y'all gave something. I want to, like I told you, I want to teach my kids life lessons. I want to teach them the meaning of what they, Christmas is supposed to be about. It's not about you getting something, getting this extravagant gift. I don't want my kids going into life thinking that they're entitled. That's what I want. I don't want them to think that they're just entitled because they're a kid. They suppose, I'm just supposed to get something because I'm a child. No, that's not the case. I want you to be able to give. And I didn't get to go I wanted to go to the homeless shelter and give. I didn't go this year. I went last year, but I didn't go this year. But I want to go take them to the homeless shelter and let them see what it looks like. Y'all being ungrateful about this stuff. I want them to understand. Some people out here that need those type of things. But from that perspective, man, really start. And I was bad about this too, Ty. I'm gonna be honest. Before I got into the business, I got into financial services. My kids was little, and like I said, I was making the money. Every week I was going to buy my kids shoes. Man. Every week I was buying them shoes. It's crazy. I'm talking about every week, because that was cheaper then. You know what I'm saying? It was $20, $30, whatever case might be. But I was like, man, when I met this, I was like, dang, if I can do that, then I can put at least $50 a month back into some type of investment that can compound on themselves. You know what I'm saying? So yeah. So right now, man, I checked my kids' account the other day, and it's sitting pretty good. So they're gonna be all right.
A friend of mine, he owns a lot of rentals in Baltimore, and he tell people all the time, he was like, buy assets, not
That's
life.
Right.
But if you
That's
have
right.
to buy a car, go get you a rental property first and use that money to pay your car.
Pay for a car. That's right. That's right. Smart. But I'm gonna be honest, Ty, some people don't know they can do that.
Exactly.
They don't know they can do that. So it ain't everybody bad, but we got to get the word out there that it's a possibility that you can be able to accomplish that. I think that's the thing, and not that it's so, like you said earlier about the fear of it. Let's take the fear out of it and make them understand, like, no, you can really go do this, and this is what's going to happen. And kind of, I think, too, lessons learned. I think this is why it's so important, even for your platform that you have, to talk about these things, because even from lessons learned, maybe there's some things that you learned during that process that would kind of take the fear out of it. Well, this is going to happen if you do that. So if I know this is going to happen, I can avoid it, or either I know it's coming, so I know how to prepare for it. That type of thing.
Absolutely. Because I believe with finances, once you eliminate the fear and once you change your mindset, a lot of people just have a poor mindset, a broke mentality.
Yep.
Well, I don't want to do this and I don't want to do that. But once you get around that, and man, I know a guy that came from Liberia, and I met with him probably a couple of years ago, and I've been following him. He buying one property at a time. And I see him taking his kids up there. You talk about leaving that lasting impression on your children. His children grow up, I got to have these J's, and they're going to grow up saying, okay, I need to go buy this next property.
That's right. That's right.
Whatever vehicle, because you mentioned diversification, whatever vehicle that you in, once your mentality changes, we can do it.
That's right.
Do it. And that's kind of what the platform is about, empowering people just for education.
That's right.
Know they can do it. And then once you know,
that's right,
get over the fear. I don't have the money. The money's there. It's all over the place. You can get the money. And anybody.
That's right.
So as we come in about almost an hour in, how can someone, we talked about term and whole. We talked about the investment opportunities through the IRAs or their 401k. You touched briefly on taking down the debt, paying off debt, having that emergency savings plan. Whatever you're doing with the extra money, do something with it.
Right.
There's also an opportunity to become a financial advisor if they want to go down that path. Maybe they can do this on a part-time basis or a full-time basis like yourself. Talk to me a little bit about how a person would go into that, what's required, and what that looks like.
Okay. Hey, man, I love to talk about that because I really think, Tyrus, that was the thing that kind of drove me in this direction. When I got into financial service, I really thought that it was something way more. Um, I don't know if it's not really strategic. Thought it was way more stressful. Just put it like that. I thought it was something that I possibly could not do. I thought you had to be special or something to that nature to get involved in it. But honestly, man, like you said, I tell anybody, if you never owned a business before, and this is what's so unique and what's so special about what I do and about coming to work with me in the organization I work with. But what's so special about it is you learn so much. If you never own a business in your life, you understand it's two things, right? There you would take most businesses down. Two things, and it's pretty high percentage. I ain't gonna put no number on it. It's pretty high percentage of these two things: mentorship and capital. Those are two things that take businesses down, right? Now, the mentorship is so valuable because even if you got the money, if you don't know what to do with it, you're gonna blow all your money. You're gonna get frustrated. You're gonna like the heck with it. You know, I'm just done. You know what I mean? So mentorship is so important. So when you come through and you're talking about the process, training is always important. I tell people all the time, training is always important. We have a 60, 90, 120-day training program we can put you in from a part-time basis. I'm not talking about full. I'm talking about the most common person that feel like they just, graduated high school, didn't know what to do with their life, and just wanted to do something, something different or whatever the case might be. This is very, very practical. All we ask you to do is get your license, pay for your background check, and that's it. You come work with us part-time, guess what it looks like? It's part-time. You're part-time. You plan your schedule how you want to plan it. If you only want to train on Saturdays or you only want to train on the weekends, the weekdays, I had a single mom came to me the other day. Friday. So said she wanted to start, but she's like, I don't have any time. I get home from my kids, I got to deal with them, blah blah. I said, well, we're in a new age now. Well, we just like we're doing now, this whole Zoom and Facebook Live and all that type of stuff. I said we do a lot of training over the phone. I mean, over the live, the Zooms and things like that, conference calls, things like that. So I said we can accommodate your training. We can do that in some type of way. You want to do it on just the weekends? You want to do it just on Sundays? All right, we can do that. So from the training aspect of it, once you learn how to get trained, like what it entails, like getting your license for one. Once you get your license, just a 7 on the multiple choice test. You do have to get your life insurance license. You have to get what they call your 6 and 63, which they have included what they call an SIE, which is an introduction to securities and investments. You got to pass that. And then you go get, the other license, like I was telling you about earlier. It's a couple more licenses that you can choose to get. Those are optional. They're not mandatory. They're totally optional. But like I told you, they're free, so you might as well go pass the test. But yeah, man. So like I said, the process is, paying, a small amount, very upfront, very small amount of money, $99 for the background check because, criminal, you gotta, make sure that. Because honestly, most time people come in, they do come from family, background, thing like that. But at the end of the day, the federal regulations and things like that go on, they have to do the background check. So that's all that's for. So they want you to do your own background check. And that's nothing new because most nurses and things like that have to do their own background check and all that type of stuff. So that's nothing new. But we definitely want you to go on, a couple training appointments to just learn the ropes. Because I think people, once they start learning part-time, they say, you know what, I want to be full-time. Once they go, I went full-time 2 years in, maybe 2.5 years in, because it's something I really wanted to do. I could have stayed part-time, but it was something I really wanted to do as far as my lifestyle. Like I talked about earlier on the live here, I talked about, me being more involved with my kids. I go pick my son up, I take him off to drop him off, take him to a different events, things like that. So I wanted to create a quality of life to be, with my kids. But if somebody just want to do a part-time, I know several people in financial services part-time making over $100,000 just on a part-time basis. So if they choose to do that, they more than welcome to can. But anybody, guys, I do have a Millionaire Mindset Facebook page. You can hit me up on that. Of course, I'm Nicholas D. White on Facebook, so you can message me on that as well. But yeah, we'll love to have you. If you're in different states, we can do training like we're doing now. So that won't be a problem. As long as you got a cell phone or some type of device, you know what I mean? So that's pretty much it. But honestly, man, it's a great opportunity for couples. I see a lot of married couples doing great jobs. We actually have what they call an African American Leadership Council, which is the culture difference. Honestly, I do see a barrier there from us, from African Americans, from Hispanics. We even have a Hispanic HLC Leadership Council as well, and women. Women are being very are dominating the industry. They're actually coming in and doing a lot too. So when you think about a financial advisor or investment advisor, whatever, you think about insurance agents, things like that. They're 50 years old and white, and they're dying out. They don't want to keep up with the technology. The technology is evolving and is coming to a era of, almost doing everything with your thumbprint now. You get a parcel with your thumbprint almost. So, but the technology and everything is evolving so much, man. It's definitely a room for anybody, young, deaf. I tell anybody, if you want to start to do something and you just want to learn about money, this is a great way to do it. A great opportunity to do it because it takes out the risk. I'm not your boss. I can't make you do anything. All I can do is show you. I can approach. So it's going to show you a lot about yourself. It's going to help with self-development. Me and you were talking about reading books earlier. I read more books than I ever have, trying to work a job because I didn't have to. I didn't have to self-develop at a job. You know what I'm saying? I just had to do what I had to do and go home. But with this, I got to self-develop because I'm building a business. I want to become, more valuable in the marketplace. So I have to read. I have to self-develop. So it teaches me more about a dad, about a father, and how to go on in life and how to be a more involved in the community, that'll allow me to help more people. So that's the thing, man. It's guys, I'm gonna tell anybody this. It's simple, but it's not easy. It's simple, but it's not. It's gonna take work. I tell anybody, don't come in thinking this is the lottery. Don't think that you're gonna do a little and get a lot. No, it's money unloaded. You gotta be able to come get a license. You gotta learn the industry, man. But it's been I'll be honest, it's been a great journey for me. I met some great people, people that I thought I'd never meet, people that I probably shouldn't have met. I say that with all humbleness, but I think that a lot of times we come across these journeys because I think everything that I get involved with is a lesson for my kids. Mm-hmm. Because I think if I meet just like you into the real estate thing, if I get my kids want to know something about real estate, I got somebody to go talk to. You know what I'm saying? And just like shout out to Sherman, because he's dealing with air conditioner work. So that joker hands on all the time. You want to do something with air conditioning, guess what? I'm gonna go give them to him. You know what I'm saying? So, you want to learn how to write a book, I'm tell a fellow about it. You know what I'm saying? So but I think, man, it's been a great journey for me, man. So I can't wait to see what's here to come. I'm excited about what's going on. Like I said, that the economic empowerment platform is going to be that you're doing is going to be dynamic, going to be very powerful. And I think these type of conversations need to be had. And even on a off the line conversations like with families, I think it's going to be very important that we sit and, kneecap to kneecap with families and teaching them about their resources and about, things they have, man. So we need more people. The reason I say that, guys, because we need more people that's learning this information, that's educating other people. I can't get to everybody. My team honestly can't get to everybody. So we're steady growing. We're vastly growing, and we need more guys. So if you're interested in getting involved, I definitely want you to be a part of it because we definitely need you. Because we need to get this information out there to the community, man.
Yes, and there is a lack because I thought about birthing this a couple of years ago, and it came from mentor middle school students who I tell them, oh, you can do this and you can be this, and they say, well, that sounds good, but that's not my reality.
That's right.
Parents are telling me. My parents don't know anything about this, and there's no connection between that parent for that kid and Eric Thomas, or one of your other big time people that you got to go pay to see. And no knock on them. I love them guys.
Right.
But there has to be some grassroots organizations to make that connection, to get them from point A to maybe they can make it to that point, that 1%er.
That's right.
You can't start thinking about being a 1%er until you get to a 50%er.
Yeah, that's right. That's right.
Your mentality is not even there. Well,
right.
I appreciate you, Nick. I appreciate everything that you're doing. I'm going to dedicate my book of the night to you because I see it's called The Go-Giver. By Bob Burg and John David Mann. And there are 5 laws of stratospheric success. And I see each one of them in you. The law of value. Your true worth is determined by how much you give in value that you take in payment. You giving that education, that knowledge, that's value. The law of compensation. Your income is determined by how many people you serve and how well you serve them. You try to reach millions.
That's right.
Not about charging one person $1 million. You make it a little bit and you giving and you serving people. Serving first. The law of influence. Your influence is determined by how abundantly you place other people's interests first. Because you can go take your knowledge of investments, of everything, and just make yourself rich.
Right.
You don't have to go and help anybody. You could take that.
Yes.
You pass those tests, you have those licenses, you can serve yourself, but you're choosing to put other people's interests first. The law of authenticity. The most valuable gift you have to offer is yourself. So you're very authentic. Your why is on the board. You had no issue in sharing that why with me. You had no problem with going into how our family backgrounds were and just being authentic. The law of receptivity. The key to effective giving is to stay open to receiving. So I know that you received knowledge well. You received that message when you were first introduced to the guy to teach you about financial services. So it's all coming full circle for you. So I definitely appreciate you. Do you have anything else that you want to leave the people with?
No, man. Hey, man, I appreciate that, man. That's like I said, it's very humbling to hear that, man. I'm definitely check that out, man. You see me over here kind of write some stuff down, man. I got to get to that one, man. But that's dope, man. I really appreciate you, Tyrus, everything you doing, man. Amazing, connecting our way from the hometown, but we keep the same roots, and what's going on, man. And I'm so excited to see where we're gonna take this thing to the next level, bro. So anytime you need my help, man, you reach out to me. I don't mind, because I'm definitely gonna reach out to you.
Absolutely. I appreciate it, Nick. For everybody that followed on with us tonight and those that catch the replay, we thank you. Have an amazing, amazing new year. And I want to leave you with this. Don't go into 2020 with resolutions. Go in with action. Because it's easy to make that resolution. But a lot of people don't be active and it just falls off. So go in with action. Make 2020 your best year. Make each day your best day. And then that compound effect will gradually take hold. And the next thing you know, you're rolling downhill, picking up everything that's coming to you and that you deserve. I thank you and good night.